This video is review of Marubeni's fiscal year 2025 full-year financial results, period from April 2024 to March 2025. Marubeni Corporation is a major Japanese trading company, Sogo Shosha. It's involved in a wide range of businesses around the world. It is one of Japan's top 5 general trading companies, alongside Itochu, Mitsubishi, Mitsui, and Sumitomo. Key factors of FY2025. For FY2025, Marubeni reported a net profit of 503 billion yen, an increase of 31.6 billion yen from the previous year. This is the first time since fiscal year 2023 that net profit exceeded 500 billion yen, making it the second highest in the company's history. However, adjusted net profit, which excludes one-time items, was 451 billion yen, a decrease of 16 billion yen from the previous year. 323 billion yen came from non-resource businesses, a record high, and 130 billion yen from resource businesses. This marks the third consecutive year that non-resource adjusted net profit has surpassed 300 billion yen under the 2024 plan, reflecting the company's strong and stable earnings base. In addition, core operating cash flow reached a record high of 606.6 billion yen, up 58.6 billion yen year-on-year, primarily driven by increased dividend income from affiliated companies. Net profit reached a near-record high, and profits from non-resource businesses also improved, resulting in a good overall performance for fiscal year 2025. Full-year forecast for FY 2026. For FY 2026, Marubeni expects a net profit of 510 billion yen, including adjusted net profit of 460 billion yen. Although profit from resource-related businesses is forecast to decline due to lower market prices, profit from non-resource businesses is expected to reach 336 billion yen, a record high. Marubeni aims to further strengthen its core strength in non-resource areas and achieve new profit records. Despite factoring in challenges such as yen appreciation and worsening market conditions, Marubeni plans to grow profits through improvements in existing businesses and contributions from growth investments under its Global Challenge 2024 and 2027 Mid-Term Management Plan. In addition to adjusted profit, the forecast includes 50 billion yen in one-time gains, largely from 80 billion yen in asset replacements, offset by a 30 billion yen contingency reserve to manage global uncertainty. Core operating cash flow is expected to be 550 billion yen. As for shareholder returns, the dividend for fiscal year 2025 will be 95 yen per share and is forecast to rise to 100 yen in fiscal year 2026, reflecting Marubeni's continued progressive dividend policy under 2027 management plan. Furthermore, Marubeni plans to buy back up to 40 billion yen in treasury shares, raising the target total shareholder return ratio to around 40%, up from the previous 30 to 35%, considering the current share price level. The forecast for fiscal year 2026 projects increased profit and a higher dividend, making the outlook promising for Marubeni's future. Adjusted net profit forecast for FY 2026. Adjusted net profit is forecasted to increase to 460 billion yen in FY 2026, up 9 billion yen year-on-year, mainly driven by profit growth in non-resource sectors, especially in strategic platform-type businesses. While profits in the resource segment are expected to decline by 16 billion yen due to lower market prices for coking coal and oil and gas, the non-resource segment is projected to rise by 20 billion yen. As resource prices are trending downward, the growth of non-resource businesses is likely to become increasingly important going forward. Profit by segment year-on-year change. For fiscal year 2025, Marubeni's results by major segment showed a mixed performance. In the resource segment, adjusted net profit in metals and mineral resources declined by 30 billion yen year-on-year, down to 125 billion yen. While the Chilean copper business benefited from rising prices, profits fell in the Australian iron ore and coking coal businesses due to lower market prices, and also declined in the steel products business. In the non-resource segments, finance, leasing, and real estate saw a 17 billion yen increase, reaching 56 billion yen, mainly due to stronger performance from the Aircastle aircraft leasing business in the U.S. Agribusiness grew by 7 billion yen to 44 billion yen, as U.S.-based Helena's agrochemicals and seed profit recovered in the second half of the year, and MacroSource also posted better results. Marubeni has strengths in the agriculture business. Forest products rose by 6 billion yen to 11 billion yen, helped by a better pulp market. Aerospace and ship increased by 6 billion yen to 36 billion yen, driven by growth in ship operations and aircraft parts. Construction, industrial machinery, and mobility fell by 9 billion yen to 18 billion yen, due to weaker performance in construction machinery and related businesses. Food, too, dropped by 6 billion yen to 13 billion yen, mainly from lower profits in livestock-related operations. Profit forecast by segment for fiscal year 2026. For fiscal year 2026, Marubeni forecasts changes in profit across several segments compared to the previous year. Food and Agri is expected to see a 14 billion yen increase in profit, reaching 85 billion yen, driven by growth in the food marketing and manufacturing business. Lifestyle is projected to rise by 6 billion yen to 32 billion yen, helped by the absence of previous losses from the containerboard business in Vietnam. Power and infrastructure services is expected to decline by 11 billion yen to 64 billion yen, as the overseas power and energy businesses return to more normal conditions. Metals and mineral resources is projected to decrease by 10 billion yen to 115 billion yen, primarily due to falling commodity prices. As resource prices continue to decline, it seems likely that general trading companies' profits from resource-related businesses will decrease. However, Marubeni appears to be able to offset challenges through its non-resource segment businesses. Share repurchases. Marubeni has announced an expansion and extension of its share repurchase program, originally approved in February 2025. This decision was made to further enhance shareholder returns and improve capital efficiency. The maximum number of shares to be repurchased has been increased from 30 million to 70 million shares, raising the ratio of repurchased shares to about 4.2% of outstanding shares. The total budget for the repurchase has been raised from 30 billion yen to 70 billion yen, an increase of 40 billion yen. The repurchase period has been extended from ending on June 30th, 2025 to January 30th, 2026. As of April 30th, 2025, Marubeni has already repurchased approximately 5.99 million shares, for a total of about 13.4 billion yen under the original program. The additional share buyback is a positive announcement for shareholders. Shareholder returns. Under its 2027 management plan, Marubeni has raised its total shareholder return ratio to around 40%, starting with an annual dividend of 100 yen per share and maintaining a progressive dividend policy. In addition to the ongoing 30 billion yen share buyback, an additional 40 billion yen buyback has been approved. Marubeni aims to increase dividends in line with medium to long-term profit growth and conduct flexible share repurchases. Marubeni is putting even more effort into enhancing shareholder returns than ever before. Stock price. This is the Japanese yen-based chart for the last 1 year. The Japanese yen stock price is 2,536 yen as of May 2nd, and the US dollar stock price is $176.64 as of May 2nd. Current PBR is 1.15 and PER is 8.2. Dividend yield is 3.94%. Compared to the last few years, the current stock price is just slightly higher in terms of PER, PBR, and dividend yield, but it remains roughly at the same level as previous averages. Like other general trading companies, Over the past few years, Marubeni's stock price has risen along with the company's improving performance. In addition, since dividend amounts have increased every year, the dividend yield has remained at roughly the same level despite the rise in stock price. Dividend yield of 3.94% is still good. Conclusion. Recently, Marubeni has maintained stable profits and EPS, earnings per share, and net profit is expected to increase in the next fiscal year, 2026 as well. As resource prices have been declining lately, profit growth in non-resource sectors will have a positive impact on Marubeni's future performance. This time, dividends have been increased again, and an additional share buyback has been implemented, showing that Marubeni continues to actively return value to shareholders as usual. FY2025 also showed strong financial results,